Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on June 2026 inflation report and MPC outlook. Inflation eases slightly, but food prices keep MPC cautious. The National Bureau of Statistics released the June 2026 inflation report last week, and the figures indicate a slight improvement in headline inflation after 3 consecutive months of increase. Headline inflation eased to 15.91% year-on-year in June, down from 15.93% in May 2026. On a month-on-month basis, inflation also eased to 1.66% from 1.75% in May, meaning prices still rose in June, but at a slightly slower pace. The Consumer Price Index also rose to 143.0 from 140.7, confirming that the general price level is still rising, although the pace has moderated. The key message is that inflation is no longer rising aggressively, but it is also not falling strongly. Since the beginning of the year, headline inflation has remained in 15% to 16% range, suggesting it is becoming sticky. For households to feel stronger relief, Nigeria will need more consistent improvement in food supply, exchange rate stability, and energy costs. Food inflation remains the biggest concern. In June 2026, food inflation stood at 17.5% year-on-year, while month-on-month food inflation rose to 3.75%, up from 2.98% in May. This indicates that food prices rose faster in June than in May, despite a slight moderation in headline inflation. The increase was driven by higher prices for items such as crayfish, fresh pepper, tomatoes, yam flour, water yam, beef, banana, cassava flour, cowpea, gari, Irish potatoes, and yam tuber. This is important because food accounts for a large share, about 60% of household spendings. So even when headline inflation declines slightly, many households may still feel pressure if food prices continue to rise. Core inflation, which excludes volatile farm produce and energy, stood at 15.9% year-on-year in June. On a month-on-month basis, core inflation eased to 1.7%, down from 1.9% in May, suggesting that underlying price pressures outside food and energy have moderated. This is a positive signal as it shows some cooling in broader goods and services prices. Looking at the major contributors to headline inflation, food and non-alcoholic beverages remain the largest contributor at 6.3%, followed by restaurants and accommodation services, transport, housing and utilities, education and health. This confirms that inflationary pressure remains concentrated on essential consumption items that households cannot easily avoid. Urban inflation was 16.1% year-on-year, higher than the rural inflation at 15.5%. On a month-on-month basis, urban inflation rose slightly to 2.1%, while rural inflation slowed to 0.5%. This suggests that price pressures in cities remained stronger, likely reflecting higher transport, housing, services, and lifestyle-related costs. On a useful insight from the sub-indices in the sharp month-on-month decline in energy prices, energy inflation fell by 7.5% in June compared to 0.7% increase in May. This likely helped to moderate the headline inflation figure. However, farm produce inflation rose to 4.4%, up from 0.9% in May, indicating that food-related pressures remain the main risk. Services inflation also eased, while imported food inflation moderated to 1.7%, down from 2.3% in May. At the state level, inflation remained uneven. The highest year-on-year headline inflation was recorded by Niger, Kogi, and Abuja, while Imo, Ebonyi, and Katsina recorded the slowest increases. For food inflation, Kogi, Niger, and Benue recorded the highest year-on-year rates. Overall, the June inflation report indicates a fragile environment. Headline inflation eased slightly, core inflation moderated, and energy prices fell sharply month on month. However, food inflation accelerated, and this remains the biggest concern for households and policymakers. July inflation may ease slightly if the energy price relief continues, but the upside risk remains food inflation, especially as food prices rose faster month on month in June, despite the moderation in headline inflation. Ahead of MPC, why a rate hold looks more likely. Ahead of the CBN's Monetary Policy Committee meeting next week, the June inflation figures give the committee reason to remain cautious. Although headline inflation eased slightly, food inflation remains elevated and exchange rate pressure has re-emerged in recent weeks. At the last MPC meeting in May, the CBN kept the monetary policy rate at 26.5%, following a 50 basis point reduction in February. Given the current data, we expect the MPC to hold rates at the current level rather than cut immediately. A rate cut at this point may be premature, especially if the CBN aims to sustain foreign portfolio inflows, support naira stability, and ensure inflation declines more convincingly. Investment strategies to hedge against inflation. From an investment perspective, investors should remain disciplined. Since inflation remains above most savings returns, idle cash should be deployed into instruments that preserve purchasing power. Treasury bills, federal government bonds, and high-quality commercial papers remain attractive, especially while yields are still relatively high. Investors should also maintain some currency diversification, but avoid excessive dollar exposure if it does not align with their goals. In equities, the focus should remain on quality companies with strong earnings, pricing power, and solid balance sheets, particularly in banking, telecommunications, energy, cement, and essential consumer goods. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, or feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.